All right, guys. So let's move on to our last tab in the example of the Ontario Summer Company financial pro forma example. So just one little detail. On the heading section of the financial statement, we need to include pro forma. So it should be pro forma balance sheet and pro forma income statement. Basically, what this is doing is it's letting the reader know that this is not something that has happened. This is something that we expect to happen in the future. So for Hoey's Lawn Care, the balance sheet is at June 30th. This is at the beginning of the summer, and the income statement will take place at the end of the summer. So for the 2 months ended August 31st. So an income statement can be for any period of time, but it is usually for a month, a quarter, 6 month period, a year. 2 months is kind of weird, but this is summer business. So to help us with this, to help simplify things, what we're going to do is I'm going to have you go back to our statement of cash flow, and we'll go over here to the end, and we're going to have you guys do a sum. So we're going to sum all of these things on the side, and I'm just going to bring it all the way down. And that will help us with some of the information that we need. So, because this is measuring all of the money that's coming in and coming out of our business. So the first thing we're going to take a look at is our revenue. So we're going to do sales revenue. So we can see here from the statement of cash flow, that is our main source of revenue, $9,000. Now, the Ontario Summer, we started off on our balance sheet that the Ontario Summer Company was a liability. But if you do all of the things that are required of them, you go to the courses, you check in with the mentors, they will waive that debt. It's no longer a debt. And then if you've completed everything at the end, you can count that actually as revenue, and they will give you another $1,500. So it changes from a liability into revenue. The other source of potential revenue that you have is at the end of the summer, if there's any equipment that you bought and you don't need it anymore, what you can do is you can sell it. And so we've accounted for that on our statement of cash flow here in the sale of equipment of $258. So next we're going to be getting into the cost of goods sold. Now we've this year, I showed you inventory at the beginning, purchases, inventory at the end. Um, that's absolutely a great way of calculating our cost of goods sold. Uh, but what we can also do is we can use the information that we've already calculated, just make things a little bit easier on us using what we've already done. So we can go to our statement of cash flow, and we can look at our main sources of basically our COGS. So in terms of grass seed over the course of the summer, we're going to be using this much. So actually let's link so fertilizer, statement of cash flow. So we're looking for fertilizer is this amount. Then we're just going to times that -1 to get a positive. All of the grass seed that I've used at the end. Now, what I'm doing here is I'm assuming that I'm using everything that I bought. Now, this is a conservative estimate. We might have some inventory left over, but we're assuming that everything that we used is either going to get used up. So that we have no inventory left. And the last bit is the labor. And once again, we will make that positive by timesing it by -1. So we have our revenue equals SUM, brackets, highlight those things. And then we've got our cost of goods sold, which is equal SUM, fertilizer, our grass seed, and our labor. Now, for you guys, in terms of things for cost of goods sold, any inventory, anything that you use up when you're delivering your service, or anything that is used up, for most of it, the big one will always be labor, particularly for any service. Um, Next, we're going to be getting into the operating expenses. We're going to leave actually, we'll start off with bank charges. So with bank charges, what we're going to do is we're going to assume that we're using Square or Apple Pay for one of our for our credit card processing. Now, they will take approximately a 3% cut. So whatever we make, 3% will be going to the credit card clearing company. Next, we've got our Shopify store, and we can go back to our statement of cash flow, and we can see our Shopify store. So over here, so $44 is spent. So it's times -1. Printed flyers. Again, going back to my statement of cash flow, printed flyers. In the course of the summer, there's 400 that I use, I pass along. Lawn sign. By the end of the summer, it's probably going to be pretty beat up, so we're going to consider it an expense. Lawn sign. It's there. Facebook ads. Go back to my statement of cash flow. So $340 I'm going to spend over the course of the summer. And then the cell phone bill. Statement of cash flow, cell phone bill is this amount here. And I'm going to times that by 1 to make that a positive number. Insurance. This is something that is required from Ontario Summer Company. It's something that Invest Auto will help you with, but we are going to account for at least $100 will be spent on insurance in case, we run over somebody's dog or something bad happens. So let's just make sure that it is all the same font, all the same size. And I'm just going to move the underline here. So that is our total operating expenses, all the money that we're spending, and we end up with a net income of $7,000. Let's clean this up just a little bit more. Format, this is going to be financial. These ones are going to be, format those numbers as financial. format all of these. Now, let's just get rid of these for right now. So the way that we set up the income statement is based off of total revenue. So we're going to do open brackets, this one plus the one to the side, close, divided by total revenue. We're going to put a dollar sign in front of the D, dollar sign in front of the 11, and drag down. Clean up the zeros. And so we can see that makes our income statement a little bit easier to read. 74% of the income is going to be coming from sales, 24% from the grant revenue, 2% from the sales of the equipment. Gives me my total revenue of $12,000. My total COGS, underline here. My total COGS is 3,000. Total COGS is 32%. Most of that is labor. Got a 68% gross profit. That's great. And then we've got our operating expenses and a beautiful, beautiful profit margin of 57%. Okay, guys, I really hope that this helps. You guys putting these together. Thank you for those guys who got this done early. There's 5 of you who got it done. I appreciate that. For the rest of you, get it done. Get it done. You have to do this before your presentations next week. All right, guys, bye for now.